All right, everybody, we'll go over gold and a couple of other trades that we're setting up today, and that's it. So just watch the bottom row. I'm making it really simple. Just watch the bottom row. That's for day trades. Top rows for swing trades. All right. So for what happened was, as you know, all right. So before I go any further, this is a 4-hour chart. Then I have a Renko, then a tape reading chart, and a lower time frame tick chart. So as you know, gold is on a tear, and what happened was the market, it had a spring, I think it was yesterday, and it had a test of that spring right here. So as it's testing, I'm watching this high volume dots, dot, 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 dot. So I know they're buying the pullback. That's all they're doing. When it's coming down like that, they're buying low, all right? Especially here. So what happened was the market went down, and this actually confirmed it. This was the initial area they started buying right here. Buy low, right? So pull back, they're buying here, then they're buying more here. How do I know? It's 1.9 times the volume. So what this is doing is when they're buying low, it's setting up support. So this is the support. It's high volume sets up support and resistance. Why? It's because they're buying. Or if they're selling and it's high volume, it becomes resistance. So as price, so this was the area. They did their initial accumulation in this area. This was overnight or whatever they were doing at this time, right? After that went down, up, down. Then this right here, this was more. Let me see if I can get the here. This buying activity is getting really high. And you see they're buying here at the same price, around the same price levels on the left hand side and the right hand side. And then eventually they flush, meaning one little shakeout, and then buy some more. So this right here, right? This is actually one wave, but this right here, they broke it into two waves, so it wouldn't be too obvious. But that's all the buying. All right. So now this volume here is the smallest volume in about eight down waves. So, you have some volume up, down, up, flush, and then go up. And after here, this was the buy point. So, you could say either here, based on low volume, or here, it's also low volume. And as you can see, the waves are less than the average. The white line is the average, the red line is less than average volume. So basically all I'm trying to say is that they accumulated here, right? Then price went up, so there's a change of behavior and pulled back on low volume. And that set up the uptrend. And that's it, it's a wrap. So what were the key learnings? First, you have to see your levels. All right, and why do you have to see levels? Why? Because if you think about it, most campaigns, whether they're intraday or on larger time frames, are planned. Meaning campaigns are planned. There's planning involved. What is the minimal thing you need to do to see a plan? Well, if you're going to buy, you need to know a price or a range of what price is going to buy. So when they're accumulating the price range around the price level, that needs to be part of the plan. Do you think any plan would not, for buying and selling, wouldn't have a price? Where do you buy low? Where do you sell high? These are prices. So the minimum amount that you need for a plan is a price level, and then you need an amount. Meaning you need an amount to buy or sell. Any accumulation would have these, or distribution would have this. How much and at what price? Again, how much and at what price? So you're always going to see in any campaign, that there's a well-defined level that was a prior level in the past, right? That serves as their reference point for buying or selling, and then high volume at that level. So here you have prior levels, prior lows. So around that area, they're going to buy. And they're going to buy a lot. So you have the two things that any accumulation distribution campaign will have is how much and at what price level. Level and amount. How much and what price. So all this buying and more here. So they complete it. It pops up, offers the retest, and that offers the move. Okay, let's go to the next market. So in this market, the ES, you had a pull back to test. Again, you have a pull back to test right here. So when it pulls back and tests the level, it's a typical test of the breakdown, right? Typical test of the breakdown. What you have is high volume at the top. So here is your price level. You have your level. Oh, where the hell? Right? And here's your distribution. Right here. Right here. And then you have your break. Alright? Here's your distribution. Right? Then you have the break. And you can see the break very clearly. It was bigger than the last 10 waves. Last 10 downwards. Look at this. This is 4.48 times average volume. Again, 4.48 times average volume. After the distribution, you have the break. That's a done deal. Pull back to test. Down she goes. Later on went lower. I wasn't expecting this. I wasn't expecting this and then this, but this was the easy, easy straight down move. Right? So what do you learn from this? You got the level. You got the, as it tests the distribution. You got the change of behavior, which is the break, distribution overhead, which is the overhead supply or overhead distribution, followed by the break, giving you low volume pullback, and it's done. So it gives you a nice directional move. All right, that's all, folks. Take care. Bye.